Hi, everybody. Welcome back to Ox Talks. It is July 17th, 2024. I am coming to you still from Paris, France. It's 3 p.m. in the afternoon here. I think it's about 6 a.m. If you're on the west coast of the United States. It's about 9 a.m. if you're on the east coast. Your guys' stock markets have not opened yet. The futures are in the red. The Dow is down as of right now. Market's open in about a half an hour, I believe. Dow's down about 110 points. The NASDAQ, however, is down almost 300 points, what I'm seeing right now. There was some news that came out overnight that Trump had made some comments relative to Taiwan and the fact that he was suggesting that Taiwan would have to pay if they wanted a defense from the United States. So from what I'm seeing, just briefly scanning some articles, that's got some of the chip manufacturers, up in arms now, and some of those chip stocks are falling. So look, the stock market, look, it's a bit of a casino. If you're really, I would say that the man on the street is the last to know relative to news, right? The people that are on the inside have already traded this stuff. They've already received information. They're already in and out of these trades, making money, while most of you are left holding the bag. So let's see what the markets do. As we discussed on the show yesterday, the Dow Jones had a tremendous day yesterday. We'll see if it gives some of that back. I see metals are about flat as of right now. My time, gold's up a few, $3-4. Silver's down about 20 cents. So let's see, what's going on. I got a comment earlier. Someone said, well, he believes that gold and stocks are in the same asset bubble. There's no doubt whenever something reaches an all-time high, you have to question, right, whether or not it's in a bubble. My response to this, guys, I gave it to whoever you are, the subscriber. I don't have your name right now in front of me. I apologize, but I do appreciate your comment. My response was, gold stocks, are not considered a tier one asset. And to my knowledge, central governments around the world are not stockpiling stocks as they are gold to prevent against a currency collapse and other geopolitical and worldwide economic risks. So I respectfully disagree with that comment. However, like I said yesterday in the video, there's no doubt when this stuff all starts to come down, gold and silver will also come down as well. It's just the way it goes. However, in the last crash cycle, we saw gold and silver recover quicker, much quicker, if you go back and look at the data and do your own research on that, than the stock market did, than the Dow, the S&P, and the NASDAQ, all right? So let's see what happens with markets today, with the metals. There is a lot going on. There's one article, I'm going to keep the video real short today because I rambled on kind of long yesterday. One article I saw that came out early this morning, I guess overnight, your guys' time, has to do with auto repossessions. And it's something we've discussed on this channel before. We've been following this as other channels have as well. I think it's very important because it again speaks to the lack of financial stability of a large swath of the American consumer. And those that went out and maybe they didn't have the best credit, and so they took on the subprime auto loans, or they took on auto loans that really they didn't have any business taking on, making monthly payments that they couldn't truly afford. And then they just realized after they got into that situation that it was too much for them to handle, or maybe they lost a job, but they didn't plan for the future. They didn't plan thinking anything was going to go wrong. All right, so we have an article today from Zero Hedge. It says, Auto Insider warns more Americans fall behind on car payments as repossessions soar 23%. The article says the delayed day of reckoning has arrived for millions of Americans who purchase vehicles with absurdly high monthly payments they no longer can afford. New data shows auto repossessions surged in the first half of the year, driven by elevated inflation and high interest rates, resulting in increased consumer distress as the labor market slows. Before we delve into the data from Cox Automotive, what the article on Zero Hedge says is let's revisit several of their reports from mid-2022 showing how Zero Hedge, had been diligently tracking the perfect storm brewing for auto repossessions. You guys can check out that article on Zero Hedge today if you want. I won't go through that, but starting July of 22 through February of 2024, Zero Hedge put out several articles dealing with the auto loan market. All right. Starting with the first one in 2022, are we headed for an auto loan crisis as delinquencies begin to rise? The last one being February of 2024 says garbage deals. Dealership puts customers in cars with $3,000 monthly payments. So go check that out if you want to look at those prior articles. 2 years later, the deterioration has now accelerated, it says. Cox data shows repos jumped 23% in the first 6 months of this year, compared with the same period in 2023. Repos started moving higher last year and have now exceeded pre-COVID levels, up 14% compared to the first half of 2019. So a big distress in the auto loan market. When you think about the costs for rent and shelter and insurance, all those things hit consumers and they have to choose what they will pay. Jeremy Robb, Senior Director of Economic and Industry Insights at Cox, told Bloomberg. Rob warned more people are getting behind on payments because everything is more expensive. But again, it has to do with taking on responsible obligations. You have to plan for things. No one understood probably in 2022, how high insurance costs were going to go, how high food costs were going to go, and they're still going higher. But when you take on an obligation, you've got to try to do your best to think into the future. If it's not something that is easily within your budgetary constraints, it's not something that you should be doing. So I don't have a tremendous amount of sympathy for some of these people that did that, right? Especially ones that have poor credit, which means they've made other bad decisions, so they go into a very high interest rate auto loan, okay? As opposed to just settling for maybe a used vehicle, something they can afford, something they don't have payments on. So again, that's on a lot of you guys individually for those decisions. You can't blame it necessarily on everything else going up, so you can't afford this payment, all right? You probably couldn't have afforded it in the first place if you really are honest with yourself about that. Fitch Ratings data shows that the percentage of subprime auto borrowers who were at least 60 days late on their bill in June was around 5.62%. That's down from the record in February. Data from Bankrate indicates the average interest rate for a new 60-month auto loan is now 7.94%, while for a used car it's around 12%. The average monthly payments have risen to $739 for new vehicles and $549 for used cars. Those are huge monthly payments, folks. I mean, for people that are working hourly pay jobs or 9-to-5 jobs, it's unworkable. And if you stepped into a used auto loan at what, 12%? I mean, that's worse than hard money loans. So that's just not wise, and we're probably going to see this accelerating as we go forward. What's clear is that consumers have used more debt than ever to fund near record car purchases. Fast forward to today, and the ominous new development is that high monthly payments in a period of elevated inflation and high interest rates have made these vehicles unaffordable for some. I would say unaffordable for many. We believe the surge in nominal auto debt and elevated interest rates will crush the subprime borrowers as more fall behind on their car payments, a trend that should only accelerate. Okay, there we go. Recently, Consumer Financial Protection Bureau officials have been concerned about troubling signs in the auto market, particularly among the so-called subprime borrowers, the ones that shouldn't be trying to get credit in the first place. Now it's a race against time for the Federal Reserve, it says, to provide relief to consumers. Traders are anticipating the first rate cut in September, driven by cooling inflation data. Don't know what that comment comes from. Not sure, guys, how the Fed cutting interest rates later this year, presuming they're going to do that, or assuming they're going to do that, is going to have any positive impact on these subprime borrowers. It's not like they're going to go out and refinance that loan necessarily, because I will pretty much guarantee you, I'm not giving financial advice, I'm not an auto expert, auto valuation appraiser or auto appraiser, but I guarantee you that the value of those cars, used or not, when they drove it off the lot, took a dive. Okay, and that's assuming you've had no accidents, no other issues with the car, you've kept it in perfect condition. If you're assuming you're going to be able to go out and refinance your vehicle and get a lower rate, I think you're going to be sadly mistaken when you go to get that loan. So unlike real estate, that if it holds value, it goes up in value, and if you have good credit, you can go and you can actually refinance sometimes into a better rate. I do not believe that carries over apples to apples as it relates to the auto market, especially for subprime borrowers. If you're a subprime borrower, you've got crappy credit, you're not going to be able to refinance into anything. All right, you're going to be stuck with that loan until you either pay off that vehicle or it gets repossessed by the bank if you either lose your job or you come into some financial difficulty or emergency when you wake up and realize that it's not a loan they should have taken probably in the first place. So that's the story for this morning. Well, it's this morning your guys' time as everyone's waking up in the United States. Here 3 p.m. Going to go join the family for some last days touring around Paris here. Got up this morning early, got the workout in. Please continue with that physical fitness. Get those steps in, get out of the chair, walk a little bit, do some strength training. If you're taking some time this summer on vacation, it's not a time to get lazy and sit around. I mean, yeah, you got to enjoy your time, but stick with some kind of a routine. Stay balanced. Try not to just overdo it on a bunch of high-calorie, terrible foods. Again, not lecturing anybody, just making some friendly suggestions so that we can continue to improve our health and stay more resilient for ourselves, our family, and our communities. All right. The last videos, I've been remiss in asking you to please subscribe to my channel if you haven't done so. I appreciate the community here. I did see a lot of comments to yesterday's video giving me some suggestions about places and things to do and things to avoid down in Italy. So I appreciate all of you. I'll try to respond to some of those comments today if I can. Unlikely to get any video up tomorrow because we're going to be traveling tomorrow. We leave early in the morning out of Paris. We fly down to Venice, okay? So I'll check in most likely on Friday, time permitting, and do some footage from down there in Italy. Thanks for everybody watching. I know that your time is valuable. You have lots of choices, things you can be checking out, on this platform and other platforms as well. So thank you again. If you are subscribed, please check to make sure you haven't been unsubscribed. I'm seeing the subscribers dip a little bit in the last couple of weeks. Maybe because I've been a bit sporadic in posting videos due to my trial schedule and the travel schedule. But it seems a little bit unusual to me. So make sure you haven't been unsubscribed. And if you're not subscribed, please do that. Hit the like button for me, thumbs up. And most importantly, share these videos with as many family and friends, colleagues, coworkers that you can. And let's get the younger people involved, please, on this stuff so they can continue. We can continue to try to get them, in this information loop so they can make better decisions going forward. All right. With that being said, I appreciate all of you. Thanks for watching. Have a great Thursday there, a productive day. I'll see you soon. Bye.